Hey, Erik, it's great to have you here on the BA podcast. And Erik Strom, which you are the partner of Erik Strom. So we got to clarify this right off the bat. We got to know there's two of you.
There's two of us,
running one company.
One company, yeah. No, Erik and I, we met in high school, and I saw him in the cafeteria one day, and he was wearing a goofy outfit. I said, hey, I got to go meet this guy. And we became friends, and then gosh, years later, we started buying apartment buildings together. So Strom, we're both Norwegian. Strom means stream in Norway, so Nord means north. Somewhere way back in our ancestors, they lived north of a stream and we lived on a stream, and that's it.
That's it. I like that. So now, what about the Erik side of it? What does that mean?
You know, I really don't know, to tell you the truth. It was my
but
dad.
It's interesting, the both of you got Erik too.
Yeah, so with a K.
And that's crazy. Anyway, that's awesome. So tell me a little bit about, what you guys are doing together as a team, company. Where's that going? Because you say you start buying apartments. Tell me about that.
So we do apartment syndication. It's basically we go out, we find a building, and it's something that we want to invest in, and then we invite investors to put their money alongside our money. And, the strategy, we operate within a niche. So the niche is multifamily, and then our niche within that is value-add multifamily.
Here in Texas?
Here in Texas, we did buy in Washington State for, gosh, I started buying in the early 2000s. So, in my 20s, I started buying up there. We started our exit out of Washington in 2018. Just became too much regulations, too many rules, too much risk. Didn't love the politics of it, but more than that, I didn't like the risk. So when the government starts telling you that you can't execute a business plan, that was when we decided that we would start selling things off.
There's one thing that's good about Texas, in reality, is very pro-business and get as much as possible freedom within reason so that things can get done.
That's very true. So, everything we do, we take a traditionally safe asset and we find ways to kind of get some juice out of it. We had built that portfolio in Seattle up to about 75 million and started selling it off. The nice thing is when you look at Texas as opposed to Seattle, we had to decide where are we going to spend the next 30 years of our life. And in Seattle, we can't screen for criminal evictions on tenants. We have to pay people to move out. We can't raise rents.
That sounds like Friends.
Yeah, it's got some common socialist elements to it. So when we came to Texas, we found that we can do all of those things still. We have, really good in-migration, good job growth.
It actually makes sense that as the owner, you're able to evict somebody who's like deteriorating the property or not behaving or this, that, and the other.
It's a crazy concept.
It's crazy. Yeah. Whereas in France, man, some people were stuck in the apartment. My parents had apartments in Paris. Yeah. They couldn't get rid of them for 10 years.
No, we had that. It got really bad during COVID too. We had people that would live there for about a year and a half, and we couldn't do anything to evict them.
There's some lack of logic and common sense that I just don't grasp.
Forget
the politics of it. I'm just saying, just the common sense of it. It just doesn't make any sense.
It is. And what we found was it wasn't a punitive thing. The people that weren't paying during COVID in Washington, anyone that lost their job, we worked with them. We said, hey, we rent to you for a reason. We did that in the first place. So, take a month off rent, find a job. They did. They became great tenants. It was the people that said, we don't have to pay.
Yeah.
So
that's all about attitude. Forget the rest.
Yeah.
More than circumstance in reality.
Absolutely.
They grab the opportunity within the circumstance to reveal themselves as people you really want to evict.
We all have to wake up in the morning and we got to work hard if we want to, get what we want.
I agree.
And I'm a huge fan of that. And if you say you're going to, rent a unit, then, pay your rent.
So, surprisingly, no. So now, if you look at the scope of what you guys are doing, where you're going, knowing that in Texas there's like, I forget what is the stat, but it's like within a million of missing doors when it comes to something like that.
Yeah, there's close to 1 million units here. Part of the reason we picked that, it's a big market. We had narrowed down when we decided, what's that next market that we're going to spend the rest of our life in. We had looked at Florida and we had looked at Texas. Specifically, we looked in Tampa, liked it, but it was a smaller market. The DFW market, Dallas-Fort Worth, is about 3 times bigger.
and Tampa does have the Gulf of America.
Yeah.
Like right on this side, you can't grow in there.
They do,
on
man.
the other side, you have the Atlantic. You can't really go much further that way. And in between, you got the Gators. So it complicates a little bit where you want to put an apartment.
Absolutely.
Whereas Texas, I mean, you got ways to go before you fill it up.
You do, and there's good and there's bad to that too. I mean, you don't have a lot of barriers to development, so you've seen a lot of supply in this market because you got generally flat, dry, and rectangular land. You don't have a lot of government hurdles that you have to get through in order to build. It is a pro-business state, so there's other factors you have to take into account. What does the supply pipeline look like? And over the last 3 years, we didn't buy a lot because interest rates had, really risen. Government spent a lot of money. And, if you have an inflationary market like that, you're either going to reduce government spending or increase interest rates to tamp down that inflation. And we know they're not going to decrease spending. So, we saw the interest rates going up and we sat on the sidelines until things made sense. And during that, we saw a lot of supply too. Now we're at this really fun point in the market where there's so many loans that were made at low interest rates that are now at high interest rates. There's so much pain. Sellers are somewhere between despair and capitulation. The development pipeline.
Despair and capitulation. That's a good one.
It is.
Unfortunately, but that sounds good.
It is, and it's not a good position for them to be in.
No.
But, there was a lot of people that bought that, who were just, kind of newer syndicators and out-of-state buyers. And so you have the macroeconomics of it, and then you have also the supply increase. And we're at a really unique time. So, this is an opportunity over the next 12, 18 months where if you look past that, the supply drops off a cliff, and we've already had the absorption to take care of it. And a lot of these people that, have notes coming due, I think there's, in America, $2 trillion worth of debt coming due this year. In Dallas-Fort Worth, we've got about 370 properties, over 100 units, that their debt is coming due in the next 18 months. And
so
most of those,
what do
can't
you
pay it
see
back.
yourself as, like, where the Eriks?
Yeah.
I want to do that. The Eriks. Where do you see yourself coming into play? Like, what is your next move? What do you see yourself a year or 18 months or 2 years from now? Like, because you've been on the sideline, you just said, kind of waiting.
For 3 years.
Which is nice, but now it's time to get back, in the saddle, so to speak. So what do you guys see, like, coming?
Well, we're coming in where there's a pain point. And, like right now we're buying 150 units in Dallas. And in that situation, the seller bought 3 buildings. The one that we're buying is the good property. The other 2 properties, he's got debt that he can't replace. The rates are too high, and so he's got to bring a check to the table to do a refinance. So he has a pain point. And the way to solve it is to sell us the good building. And then with those proceeds, he can go plug a couple $1 million hole in the other 2 and not get foreclosed on. That's a situation where we can come in and the investment makes a lot of sense to us.
Are you looking for more investors to work with you to get more deals, or like private money that comes in to kind of support the growth and picking up all those deals?
Yeah.
That way you don't depend exclusively on your own finances, but you bring in. Is that kind of the current play?
Correct, yeah. So, we're always looking for 2 things. We're looking for a great deal, and then we're looking for investors that want a great return, good passive return, sponsors that have a good track record. We've been syndicating for 17 years, 17 projects, 14 of them round-tripped, and our average return on those has been 31% a year. So, we've got the chops to back it up and the experience and the hard knocks. So we're looking for people that, want to take part in that opportunity with us.
Nice. So I think with all the discussion there's around crypto, around the fear of how the market's going to collapse and all this, and all that really spooky gloom and doom scenarios that are being like depicted by all experts in one way or another, I think there's a lot of people that sit on money that don't want to put in a stock because they don't know where's that going. They don't really want to put in crypto because they're not sure what the heck, really, how's that going to turn out? Even though it looks promising, they're still very cryptic.
Yeah.
I like a better word. So probably there's quite a few individuals that if they were aware of the possibilities and to work with you, individuals like you, but you specifically, to invest into land, into brick and mortar, into real estate, because we know land does not stretch unless you're in Hawaii. It does not get any bigger.
They're not making more of it.
Right? They're not. And then the houses in Texas, it is a dire necessity. So these individuals that have that money could definitely reach out to you guys to figure out, what is the next deal that they can invest with, and with 30% return. You guys will work it out, obviously, in a different. Everybody gets their piece and so on and so forth. However, the reassurance and the confidence of something positive and a positive outcome with 17-year track record is undeniable.
Yeah, it's everyone's got a risk profile where you've got I'm going to take a shot down the field, I'm going to invest in maybe and I don't think crypto is a bad thing to invest in right now. I'll probably do a little bit of that, but for ours it's I want to go to bed at night. I want to know that this is a generally low risk thing. I think our investors can go to bed knowing that what to expect, is 6 to 10% cash flow return per year, and that we're going to try and double your money in 5 years. And we've typically been able to do that. Great investments.
I think people are risk averse after going through 2008, the different market crashes, DeepSeek showing up, and this, that, blah, blah, blah. I think people are like, okay, how about we just chill a little bit and we invest into something that we know. Yeah. We need a roof, we need walls, we need a bathroom, a septic tank, and things got to function. I think it's a fair assumption that a lot of people kind of are looking for that reliable, calm, poised, proven, tangible, you can touch and
and that's where most of my money goes, because I have that risk profile where I don't want to worry about a total loss of capital, but I do want something that might be just a little bit sexier than the stock market, or that I feel like I can wrap my arms around.
You can drive by it. You can
drive by it, you can touch it, you can understand it. Somebody, a family, a young professional, they need a home. And you can see it. Okay, well, if I go upgrade a kitchen or a bathroom, then I can get $100, $200 more in
per
rent,
month, and therefore
and then the value of the building goes up. And because it's all value.
A very
based
simple
on the cash flow.
math that does not require to understand weird wallets and acronyms. At some point we want to.
It's pretty simple. I mean, every $100 that you increase rent by, you get $20,000 in value in today's market. So you can literally do it on the back of a napkin. We bought a 100 unit. We increased the rents by $300 a month. We created $6 million in value. That's it.
So it was a pleasure to have you on the podcast. We're looking forward to have more of you at the Eriks 1 and 2. I want to wrap it up because we got to go. However, it was very informative, and we definitely look forward to more insight, because I enjoy you guys sharing the current state of things like you guys did, because it's not theories. It's in the trenches, been there, done that. 17 years is not like I had an idea to. Post-COVID, I decided to make myself an expert in something. It is.
We've been through a couple cycles. We've been through the recession. We weren't hurt. We held, and we still made great returns, and that's why I continue to buy these things. There's a lot of exits, and it's pretty stable, and I can sleep well at night knowing that I own them.
And you keep your hair on your head, and therefore you're not very stressed.
Well, that's part genetics too.
The other Erik is picking up the slack.
He's helping us in that department.
It was a pleasure to have you, Erik.
Thank you, Jerome.
And again, looking forward to having you more and more at the next events.
Sounds great.